Good morning, guys. So today we're going to talk about the jobless claims. Tesla is increasing their prices of their cars. SPACs, are they becoming risky? That's what the SEC is saying. Gold is no longer a hedge, according to some people. I don't know about that. I guess we're going to find out. Let's do a little bit more digging. And of course, your guys' stocks next. Okay. Let's do it. First things first, we're going to talk about the jobless claims and the unemployment claims. And surprisingly, they're coming down, which I am a big fan of where we at. Here we go. So jobless claims are, my boyfriend is getting jealous of everything money. That's funny. Jobless claims are coming down. We filed and we saw, I know expected was 725,000. We saw 712,000 this month, or this last week. So that's good. Continuing claims has dropped. And the most important thing I think we should note is that for the third week in a row, we are under this 800,000 mark. We're still above this Great Recession area back in 2009, which I don't like. But there are plans. There's talks of companies like Disney that are going to be coming back, bringing back furloughed workers and whatnot. We have, which is great. I mean, in California and Florida, they're closed down, which will be good. Of course, we have, I mean, that's going to help a lot of businesses because they have concessions, they have manufacturing and whatnot. I doubt they do it in the United States, but as far as concessions go, I bet they do have a lot of that. So that'll kind of create a snowball effect of creating jobs. Now, by state, of course, California is the highest. They're not opening anything. Ohio is still a mess as far as jobless claims go. Of course, there's a lot of fraud in Ohio. Shocker. The vast majority of declines. Okay. So the one thing that I'm kind of concerned about with that, I think this is good progress that we're moving forward. The only thing that I don't like is the new bill that was passed in the House is kind of disincentivizing going back to work. I don't know if that, I hope that isn't the case, but extending unemployment benefits is not the best idea in the world to create jobs, but whatever. We'll see what happens. Next, I want to talk about Tesla. I saw this morning. Nothing crazy, but Tesla's increasing the prices of some of their cars. The Model Y and the Model S Plaid, which I think it starts at like $135,000. So it's not like your typical car, but they increased the price of those. They increased the price of the Model 3, both of them, maybe, what is this? Maybe 1.5%, something like that. However, the performance Model Y stay the same price. So they're looking to make more money, which is not surprising. They need to do something. I mean, let's just go right into talking about the Apple car. And they made a great comparison in this article. So, by 10K, yeah. Yeah, but Spicer, that So I don't know about the Model Y, but I know the Model S Plaid. I'm pretty sure it starts at like 135,000. So 10K to that. I mean, it's nothing. I mean, whatever. So Apple has three choices to build a car: partner with somebody, build its own factory, or team up with some company that they're already kind of partnered with. I know we know in the past they've talked to Hyundai. They allegedly talked to Nissan. I think they were supposed to talk to Ferrari, which I think they did. So we'll see what's going to happen. I mean, Apple has always done their own stuff, with the exception of getting chips from Intel and I think Qualcomm back in the day. I could be wrong, but definitely Intel. And now they're going to start building their own chips. But they've always kind of done their own thing. So I don't really see it I don't really see the point of going, and they have the money to do this. So I don't really see the point of them going and partnering with another company. And essentially what they're going to do, I mean, if they go and take a Hyundai, it's not like they're going to leave the Hyundai body in this and that. They're going to reinvent the entire car. Probably the frame of it will be a Hyundai frame. So is it worth it in the long run? I don't know. But the part that I was talking about Tesla and Apple is Tesla's the most successful electric car company to date. It's lost billions of dollars, and it's finally generating regular income. Now, I did not look into their financials. I don't know what regular income means from this Yahoo Finance story, but you can see that they reported a profit of 700 million last year. Apple reported 60 billion. At one point, and I don't know if they still do, probably now they do, Apple had more cash than the United States government. So, I don't know. Let's see. They rely on Samsung for parts and metal frames and screens. Maybe that's true. I don't know. Alrighty. This one caught my eye too. Bumble. And there was a reason that it caught my eye. So Bumble said let's start at the bottom of the article first. The net loss of this company, 26.1 million during the quarter. They just went public recently, from a net loss of 17.2 a year ago. So they're losing more money. Of course, they were private a year ago. But Bumble on Wednesday said it expects that pent-up demand from people who have been avoiding dating in person because of the pandemic. So this is more of just there is something to be said for this company is going to do something like, I look at an Apple product and we can say this many people have iPhone 10s. That phone is now 3 years old. The likelihood of those people upgrading to the iPhone 13 or what have you in September is a little bit more easy to predict than saying pent-up demand of people staying home from a pandemic are going to go out and start dating. And it's just like this goes back to the whole Neo thing and Workhorse and all of these companies that are just like, this is going to happen. Let's pay them big in the future. And it's like, man, I don't know. That's the thing that I took away from this Bumble article. It's just more of this. Let's say that this has a high likelihood of happening based on what? Nothing. That this is going to happen. I don't know. Maybe they have something that I don't know. I don't know. But okay, SEC. This I found interesting. The SEC finally came out after all of this year-long stuff of these. I know they're called SPACs, but I'm calling them SPACs because SPAC is a dumb name and it reminds me of spackle that you put on a wall. So SPACs, of course they're celebrity backed, and we have ones that are backed by Jay-Z, Serena, Shaq. I was listening to A-Rod the other day. He was on the board of Hims and Hers, and now he's on the board of something else, some other one that came out, I believe, 2 weeks ago. He is involved with 31 of these SPACs, and he's going to be, this A-Rod, whether he's a good businessman or not, he has very good marketing. He has a big social media following. Smart guy. Whatever he's doing, smart guy. People use dating apps. Mason, that's a great point. People use dating apps more during lockdown. Why are they going to start? I would think that actually people would start using dating apps less maybe that's not true. But I would think that people would start using dating apps less because they're going to find somebody on a date in person and they're not going to go back to the app. But of course, there's plenty of fish in the sea. Last one I wanted to talk about, then I'll get to your guys' stocks and whatever you guys want to talk about. BlackRock says that gold is failing as an equity hedge. So I do see where they're coming from. I have a very large position in gold right now. GDX, GDXJ, and AU. So two of them are ETF miners, and then there's AU, which is a company. But I said this, I think I said this on the live stream this past Tuesday. I do not understand what is happening with gold, because typically whenever you see the dollar go down, gold does the opposite of it because it's a hedge. Whenever you see markets fall, gold does the opposite. Gold is doing exactly the same thing as other stocks. So it's very perplexing, and that's kind of what this article is talking about. I do think that in the long run, gold will do well. I'm very big on this. More stimulus, more giving away money, more of this. I think that this is going to be good for gold. It might not show it right now, but I mean, my bet on gold is long. I mean, it's years. It's not next week. So, yeah, that's gold. So that's all I got for the news of the morning. Let's check the treasury yields yesterday. The 10-year dropped a little bit. Man, this 3-month is crazy. And I've talked about the yield curve inverting. So I'm going to draw this for you new people that don't know about the yield curve. So if you have the 3-month here, this is blue, 3-month. And the 10-year, which is, I'm going to be pink. So when we talk about yield curves inverting, we're talking about loaning money to the government and getting some kind of payment back. So when you loan money to the government long term, let's say you loan it to them today for a 10-year treasury yield note, you're going to get 1.53% back on your money. If you loan it to them at a shorter rate of 3 months, you're going to get 0.04% of your money right now. So that's this number right here. That's a 3-month and 10-year. This is terrible, but this is terrible rates compared to what you used to get. But the issue that we see and we have seen in the past is that the 3-month yield, when the yield curve inverts, you are getting more money in a shorter term loaning it to the government than a 10-year note. So what this would mean is that maybe this number becomes, let's say 0.3, and the 3-month note becomes, say, 0.5. So they're saying that you're going to get more return to lend your money to the government for a shorter term, which is no good. No, that's a bad thing. And when the yield curve inverts, and it did invert, it inverted in 2018, it inverted in the beginning of this year for like a day. Anytime you see that, the government's going to come in with the plunger team and do whatever they can to get that yield curve to revert so that everything is okay. Because when that happens, when that yield curve inverts, bad things happen. We had yield curve inversion in 08. Anytime you have some big crash, the yield curve inverts. So that's just something. I check this every morning. I just want to see where the notes are every morning. And I just can't believe that I used to put my money, all my cash, in 3-month treasuries and just let it sit. And it collects an interest rate of, well, let me go to 2018 and just see what I was collecting in 18. So you can see in 18, you were getting about, let's say for numbers' sake, 1.5%. So you put your cash in something in a treasury 3-month note, you get 1.5% return on it. Now you can see what you get. It's basically nothing. I mean, 0.04 is it now? 0.04. Yeah, it's crazy. So that's the note. But all right. Okay. You know what? Before I get started, I want to tell you guys what I did yesterday. I went ahead and I bought Cardinal Health. What the hell? Yeah, so I went ahead and bought Cardinal Health. I don't need a touch screen. Touch screens suck. So Cardinal Health I bought yesterday, and you guys hit the like button. We only have 35 likes and 133 people watching. So the reason that I bought Cardinal Health, and this was from a patron, this was in the group, the Mo's Muscles Patreon chat. somebody brought this to me, and I read it for them, and I was like, oh, wow, now I have something to look at. So this candle right here, this is incorrect. I'm going to fill this out in blue. This is a big green candlestick, and that's what it looks like right now. So my chart has a little bit of a glitch on it. So I bought yesterday with this big green engulfing candlestick. Okay. What I saw was we had a beautiful trend going up. And you guys that are I know there's been a lot of questions in the Mo's muscles. Just pay attention to this and I'll explain everything. So I saw that we were moving very nicely through our sweet spot. My bid and ask difference was 2 cents when I bought it. So everything was looking good. I had a great green engulfing candlestick on top of these 2 previous days. I looked over here. I was over all 4 of my major moving averages. I cleared this resistance of 54.88 and I kind of broke out. So this, guys, again, this is a big green candlestick and it looked like that. So then I took this and I zoomed out and also by the way, I was getting great volume yesterday right here. So this was a good looking buy. I zoomed out and now I wanted to see where is this thing going to run to? Because people are asking me, what's my exit strategy, this and that. So when I buy something that looks like this, I don't go in there saying, okay, it's $56 I bought it at. I'm going to sell it at 58. I don't do that. I go based on price. And remember, this is what I want to, I do this all the time. I black out price. If you want to be a good trader, you don't focus on price until you want to see how much you can afford. I don't care what the price is. I don't care what the company is. All I care about is the trend and the bid and the ask difference. Now, let me go here. All right. So I looked at it and I said, okay, there is a resistance line running through here. So what I'm going to do is I'm just going to keep trying to get this trend to move up on me, which it will, and just keep getting engulfing candlesticks. Now, it'll run into some resistance up here, and that price will be a little under $57, but this thing I think has enough consistent volume. Look over the past, say, month of how consistent the volume has been. So I am not worried. This is going to be something that works out for us, I think. And yeah, so I bought this yesterday with the group. There was a lot of people that went ahead and followed me or that they want to do a trade with me. If you guys want to do that kind of stuff, more power to you. But I'm telling you what I'm doing trading. I'm not telling you guys to do it. I'm not telling you I'm right or I'm wrong. But yeah, that's it. How much more volatility will an additional 1,400 per trader cause? Yeah, it's an interesting question. I read an article earlier this week that said that people getting this money, this additional $1,400 is just going to give them more money to put into the market. And you know, there's a lot of argument and discussion that the feds are going and the government is basically going to go in and buy stocks. We haven't seen it yet. That would be a travesty, but I do think that this is an indirect way for companies to go in and buy stock. I mean, the government to go in and buy stocks. You give money to a third party and they go do it for you. So, of course, not everybody's going to do it, but of course it would be highly illegal for the government to do that. But, yeah. All right. Let's see. Guys, ask me some of your questions and I'll roll with them. I haven't really been paying attention to the chat. Sorry about that. Chance. Can you talk about margin affecting the sell-off? I don't really know who trades on margin. I hope nobody in here does. Margin is a very dangerous thing to do. I don't trade on margin. I never have traded on margin. My father has traded on margin. Maybe he's in here. But I was talking about margin this morning with my mom, and she was talking about how upset she was back in the day when he was trading on margin. He took the money from her car loan or something, and yeah, I don't know. How are you on Kirtland Gold? I think we covered Kirtland Gold earlier. All the gold ones look the same. Again, it's just a dog stock. They're all the same. They're just going to keep going down until they're not going down anymore. Throw a tracker share on and just wait. You have a lot of stuff to go through. But the good thing about gold is that when gold is needed and when everybody wants gold and it's favorable, this thing is going to shoot up. You're going to see gaps going up like this. That's what we saw maybe a year ago or less than a year ago, it's going to happen. If the Fed buys stocks, I'm going to go from calling the capital guys morons to buying a Viking helmet. We'll go over the options in the chat. I don't want to do options right now. CCL, I want to do that one because everybody's talking about it. So first and foremost, CCL is a 50% stock. So if you guys don't know what 50% rule is, go to the Trading 101 series, check it out. 50% are very powerful in a bad way. Depends how you want to look at it. So if you are looking at a 50%er, that means that you have your high, you have your low, and then you have your middle ground. And you can see that CCL over the last year has had a very difficult time breaking out again above this level because of all of this. This is just called overhang. And overhang is just negative sentiment. And people know that when the price gets up to this area, they're going to start pulling back. So they're going to say, well, when it gets here, I'm just going to sell and I'm going to take my profits. And that's the problem with 50%ers. There's such negative sentiment on it at that certain level that when it gets to that price, there comes in a lot of sellers and they send it back down, ride it back up, send it back down. So it takes a lot for this to get through. I heard that Disney is going to start sailing again in September or something like that, the fall. So we'll see if CCL does the same thing. I'm sure they would. But I am in this, but I'm in this as a value play. So I bought this thing, I bought it under $20, but you can see that we had a little bit of a run, which is nice. If you're in this as a trade, not a value play, you need to exit this position because you've gone into a downtrend with your red line under your yellow going through the sweet spot. So this is technically a short now. And if you wanted to, you could throw a tracker share short on it and wait for engulfing below this $26 level. But this is a value play for me. I'm long term, and that's that for CCL. Cruises are for boomers. Pass. They're gonna find a way to get. They're gonna find a way to get the millennials on cruises. I don't know what maybe they'll do like nude Bitcoin cruises with. You can go and play Fortnite naked or something like that. That sounds like a good millennial cruise. Could you look at HIMS? I don't know if you give me the ticker symbol. How much was it when you bought it? I think I paid like $18 for CCL or something. But I also have puts going from $19 all the way down to $250. So I have a lot of things. I have a lot of capital on CCL. All right, it's HIMS. Okay, thanks. I had a feeling it was going to be HIMS. This is an IPO, right? Yeah, I mean, so the problem with IPOs, we just crossed, so this is the 25-day moving average, this little bit. So just this date, whatever this was, turned into the 25th day of them being public. So don't love it. I don't trade IPOs. I always say hell no to the IPO because a chart is like a story. It's an entire book. And this is not even giving me the preface of the book. So what am I supposed to do with this? I don't have any, first of all, I don't have any moving averages except for one. And this does nothing for me because it's only like 7 days old. So I don't know where any support is. I don't know where any resistance is. So if you do something with this, you need to just day trade it on a 15-minute chart and go from there. I would not be trying to trade this thing on a long-term scale. It's just too risky, way too risky. And I'm just gonna, I don't really know, but I'm assuming that they probably don't make a lot of money. But I know they advertise like crazy. I would love to see their advertising budget. That's probably something fun to look up in the 10K. Tupperware. So Tupperware, what is Tupperware doing now? Oh my God. So I remember Paul and I looked at Tupperware back in here, and our concern was that they were not going to last as a company. And the only reason is because there's just so much cheap other stuff out there. If you have an option of going and buying Tupperware package, whatever you buy, sets of 20 for $50 versus going and buying some Chinese knockoff for $20 or less, and you can they're cheaper than that, $10 or less, and you can replace it every year, what are you going to do? I think most people are going to do that, especially in the situation that our economy is in. So Tupperware gapped down this morning. I assume they reported earnings or some such thing. Man, this thing gapped all the... Maybe this was yesterday. Yeah, this was yesterday. Okay, maybe they reported earnings, but it's funny. They came down to this line right here. What is that? 27. Oh, okay. Interesting. It just kind of fell to this arbitrary number. I was guessing that it would have fallen to its 50-day or 200-day moving average or something, but I wouldn't do anything with this. Yeah, to be honest, I just wouldn't do anything with this. If you want to, man, personally, I wouldn't do anything with it. Go find another stock. You can keep your eye on it, but don't do anything like that. Let's see. SWCH. Okay. I thought you sent this to me yesterday. I think I reviewed it for you. Okay, we have a gap down, which is cool. This is definitely a short, and it's a snapback. So let me explain snapbacks real quick. So this is where good traders get separated from bad traders. So you have a stock that gaps down on you, and it goes in. Well, it was already a downtrend, but now it's really a downtrend. Okay. The stock price falls. Let's say you put a short on right here. You started making some money. Okay, I'm doing a good job. Congratulations. Then all of a sudden, like the last few days, you start getting a snapback, and you bought it. Let's say you sold short right here. And you're like, oh my God, I need to get out of this. The price is going up. It's over. I'm going to go broke. I don't know how to short. Okay. This right here is a snapback. That's all it is. Nothing to worry about. I always say the trend is your friend. Keep an eye on your trend. As long as your trend is good going down, and it is, this separation in here between the yellow and the red is awesome. You just keep going with it. All it did was bounce off of support at 1383. Now let me switch to a line chart. I always talk about your W formations. This is just forming an M formation. So you had that big drop. You had your higher low. This wasn't that ideal. But what I would have liked to see is this thing drop down, go right to there, and then fall again. So maybe you're onto something. But I still would be fine with this. It's just starting to form a short right now. So what I would want to see is this fall, as long as it takes out this low of 1370, or what is that? 1370, whatever that is, you'll be fine. But that's a snapback for you. Don't get scared of snapbacks. Snapbacks are a good thing. GE, I can look at GE. Guys, hit the like button. We are not. Oh, what happened to GE? We have 152 watching and 76 likes. Okay, GE, for sure a short, but you might be adding to your short position today if you want to. Oh, wow. So if you are comfortable shorting, do not short if you don't know what you're doing. That's all I have to say. You can probably add to this today, but wait until 10:06. Wait until 6 after. Oh, that's right. They did the reverse stock split. I remember reading that. If you can get some kind of engulfing like that, red candle, obviously, then you can add to this. And I assume that you'll get some kind of run down to this 1050 area. You do have a lot of support to go through, including the 100-day moving average. So a reverse split, not ideal for investors. Maybe, yeah, that could be why, but we will see. Mo, are you a fan of trading with Rayner? Because I'm in all three of... I'm not really sure who that is. But if he says the trend is your friend, that's pretty good. If he actually believes in it. SMG power stock. SMG. So I explained power stocks the other day. No, this is not a power stock. First of all, whoever asked this question, Casey, you need to go and watch Trading 101 series, because this is you're in a downtrend right now. You're below 2 of your moving averages, and you're not making all-time highs. Let's see. Yeah, you need, for this to be a power stock, maybe this was a power stock. Let me see. The trend is your friend until it ends. Yeah. So when that's exactly right. Then get out of it. So This was a power stock. You were making new highs, new record highs, 52-week highs, what have you. Oh, this was an IPO back in this area. So they went public back in March of 19. So no, this is not a power stock to answer your question. I want to look at H&R Block. That is another stock that I own. Let's see. Ooh, finally. Could we be actually getting something out of H&R Block? I love the volume yesterday. I love that we're overall 4 of our major moving averages finally. And we finally broke out of this consolidation area. So I believe, oh my goodness, look at that bid and ask. 30 cents. I think this yesterday was filled. I think. I can't remember. There's a glitch on my charts today, but we're starting the morning at 2065. So let's see what we can do. What I would really like to see today is if I can get a breakout like that, just any kind of engulfing candle. If I can get this candlestick right here, up here, then I will be happy and I will add to it. And yeah, but this needs to drop. So we have 20 seconds until the market opens. I want to see what this does in a little bit, couple seconds. Daily candles, but he's constantly zoom. Teaching wealth. Is that a question? I don't know. AMD, I'll do AMD. Somebody asked a question the other day about doing semiconductors on the live stream. I like the idea, but the problem is any semiconductor company that you go out and find right now, it's not going to hit the 8 pillars because they're just so incredibly overpriced. Let me see if I'm going to look on my spreadsheet. Let me just type in AMD. Oops. What is AMD? Man, we have a negative value on it. Let's see Micron. Oh, Micron's not terrible. The current price is 88 bucks. Our value is probably 50. So not terrible. What's another one? Let's see what Intel is. $63 currently. Probably 45 is our level. So I don't know. It'll be hard. Intel is the closest. Yeah, you're right. Let's see. AMD. So we're a downtrend on AMD. We're under 3 of our moving averages, and we're just kind of sitting at this 200. So this is going to need a lot of buying volume to get up. I would, man, if you want to do something here, you could throw a tracker share on. It's a little bit early, but I think I would just keep this on my watch list and just keep watching it until I can go long on it or something. Kevin was asking what time frames you use on each screen. So this one over here is my long-term chart. I call this my weekly chart. And so each one of these candlesticks is 1 day. I call it my weekly chart because this is a weekly stochastic. So it moves a little bit slower. This over here, all of these candlesticks are 1 day. The only reason that I use this chart is to see my moving averages. I do not swing trade. It's just not for me. But this stochastic down here is a daily stochastic. So those are my time frames. Let's see here. Why after 10:06? Good question. So after 10:06, let's see. Let me see if we can get on here. All right, we're making money on, what is this, Cardinal Health. And the market is up. Oh, the NASDAQ is up 1.5%. All right, let me see if we can find some stuff. AMD. All right, here's a good example. Who asked this question? Carlos. The reason that we use this is because this is all, we let all of this gray area, this is all overnight trading. So we just get rid of all of this overnight trading. The black is between the hours of 9:30 and 4, and the gray is after hours. So all of this after hours trading, that needs to settle down. All of the futures market, all of the government putting in money into the buying futures and this and that and spiking up the stock market, all of that needs to settle down. So you can see that this morning, like look at how big this is jumping right now. This is all aftermarket trading settling down. Look at these big price jumps. So the reason that I wait until 10:06 is because I have found that it takes 36 minutes for everything to just kind of settle down. So this price here, we're up 3%. I would look at it at 10:06 and see where it's at. it could be up 1%. It could be negative at that hour. It could still be up 3%. But the point is, we need to wait and let all the BS settle itself down, and that's why we do it. Hey, there's Matt. Nice. And Matt, I just read your text. I'll text you after the show and see what idea you have for me. Can you make a video on how to set up each chart? Aaron, I think you are a patron. There is a PowerPoint in the Patreon announcements that Simple Living made, and yeah, it teaches you how to set it up. Exactly, an exact replica of mine. And it's on TradingView, which is a free platform. So eventually, I'll have my own charts out, and you guys will have exactly the same thing as me. It's just going to cost me a lot of money to do. So I need more people. So sign up for the Patreon. Let's see. MACD. So I tried to look this one up yesterday, this MACD, and I don't think, is this like an over-the-counter or something? I don't have it. Let's go here. I want to see what this thing is. Oh, what's up with this Roblox? What is this Roblox? Can somebody tell me? Yeah, I don't know what this MACD thing is that you guys are talking about. Yeah. How do we do a momentum trade? KP, good question. Wait, KP, are you talking about a momentum trade like the momentum that Paul and I want to do? Or are you talking about like momentum as in a 15-minute chart? That's what I want to know. Because if you want, I can't show you right now momentum. I can explain it, but let's see. Roblox. It's a kid's game. It's the next Minecraft. Oh, okay. So I was looking at this. Somebody was telling me about this Roblox, and I want to see what their market cap is. $40 billion. $40 billion, and I'm assuming that they don't make any money. I think they profited $1 billion last year, which is actually pretty good. But this would be an interesting one to look at and just see how bad it really is. I think their market cap was 60 billion yesterday at some point, but 45 jumped to 68. Nice. All right, KP. So our strategy is you're taking two major moving averages. This is for momentum trading. You're taking two major moving averages, and you are let's say I'm using the 100-day moving average and the 200-day moving average, for example. We don't do anything. We like this because it's very systematic. The computer does everything for us. When the 100-day moving average crosses up over the 200-day moving average, the computer automatically buys whatever company. So we're going to have a basket of stocks, say 50 stocks. I don't care what company it is. Once the 100 crosses the 200, it goes and buys it. And it stays in that position for as long as it does. Once the 100 drops below the 200, it goes ahead and sells it. And that's exactly what we're doing. It's systematic. We don't even look at it. It's kind of computer trading, but that's fine with us. Roblox is going to boom. I hope you're there for the boom and not the bust. What are your thoughts on direct listings? Does this change your opinion on IPO? No, my opinion on IPO stays the same because every IPO that comes out now doesn't make money, is incredibly overpriced, and that's from a fundamental perspective. And then you look at it from a chart perspective, and I don't have a chart on it. So IPOs, to me, do what you want to do with them, but not my thing. I'm not trying to get rich quick. Oh, good. Joseph, that's not for you. Good. I barely got enough to put $100 in the market. You think I'm going to spend $20 per month on the Patreon? Oh, all right. Sounds good. That goes back to people don't understand that. Never mind. Where can I find good stocks to day trade? Jasper, this is what I do when I look for good stocks to day trade. Well, when I used to day trade, I would go to Yahoo Finance, go to market, go to most actives, and I just see what the most active is. That's what the biggest volume of the day is currently. So these are the ones that I would look for, because typically when you need volume to make the price move. So I would look at the most actives. Then I would start looking at the biggest gainers. just to see. Usually the biggest gainers are all stuff that I've never heard of. Like, I've never heard of any of these. Bumble I've heard of. Okay, so, Konica Minolta. So you can do them, just make sure you're using stops. And typically the biggest gainers, their volume is very little. Like, you see a lot of thousands in here. Their average volume, you see how little it is. It's you're not going to really see anything over 10 million, something like that. I mean, you could, of course, but and then if you want to short, go look at the biggest losers. And here's your biggest losers. Again, typically things you haven't heard of. Oh wow, G's in there. But that's how I would do it. You could also go to stock twits. You could do anything like that. Let's see. Except I'm 18. I love it. You guys that are getting into, that are following us, you guys are going to do very well. It just shows that you guys care and you get it and you have a good head on your shoulders. I think it's great. That's exactly right. $50 a month subscription has already made me $1,200 trading AMCX and CCL with these guys. And AMCX and CCL are not hype stocks. They're just normal stocks. We're not in here trading all of this nonsense stuff. We're trading real stocks, and that is what it is. So somebody just talked about CAH. I just want to look. Okay, so it's down a little bit. That's fine. Let's look at the long-term chart, and we'll go from there. CAH. Okay, I want to look at a line chart here. All right, good. So this is a good thing that we're pulling back a little bit. Our trend is still awesome. It's just running into a little bit of resistance at 56.74. So but you can see we're creating W formations going up with higher lows. So this is perfect. This I do expect to pull back just a touch and then get going. So I am fine with a pullback. Snapbacks are a good thing. Don't worry. This is not a day trade. This is not a swing trade. We are in this for the long haul. So I am not concerned that this thing pulled back or is pulling back. It's exactly what we want. Good call. Let's check out HRB. I'm making money back doing covered calls on Disney and Apple. Good job. Aha, perfect. So I'm loving this. You can see, again, trend is up. We have a little bit of separation. Look at our higher lows that we're making with our W's, just pulling back. So what I really liked yesterday is that we broke through resistance and the price closed on top of resistance. Now, no big deal. We're getting a little bit of a pullback. And the good thing is that this resistance line just became a support line. So I do not foresee H&R Block pulling back further than this 2030 area. And if it does, I don't think it's going to last very long. I think it's going to create some kind of W and then get going like this. And there's our bid and ask difference of 1 or 2 cents. So it's perfect. I'm in HRB as long as I have to be. I'm just going to keep going with what it tells me. The bad part about H&R Block is that you have all of this overhang right here. You can see that it tried to get through it in May, couldn't. October, November, couldn't, and it's back up there again. So we need something to push this thing. And I think, what month is this? What month is it? March. So I think that, I mean, tax season's coming up. These people are everywhere. They're in every mini mall. They're in every Walmart that I go into, even though I stopped going to Walmart because the people are very interesting in Walmart. So that's that. Is there a buy right now from a value standpoint in H&R Block? Yes, there is. I have a lot of puts on H&R Block as well at $16 and $15. So I love H&R Block from a value point of view too. Disney is going to do well in the next 5 years. Yeah, it's very possible. I think Disney is unnecessarily up. They are hitting record highs and they've been shut down with 45% of their business for over a year all across the world. And we're making brand new highs because we're saying that a streaming service that is given away for free to most people is going to carry the company. Noted. What's a good buy point on H&R Block? So the problem with H&R Block right now, if you haven't bought it, is you're kind of buying at the tail end. You're getting in the this is like reaching into the cookie jar and trying to grab crumbs instead of trying to grab a real cookie. So this is where you should be buying, somewhere in this sweet spot area. You don't want to be buying now. We're overbought. So I wouldn't advise getting into H&R Block right now from a trading perspective. Disney is all about the Disney Plus subscribers hype. Yeah. The funny thing is with Verizon, when Disney Plus came out, they gave me 3 or 6 months for free. First of all, I never watched it, but maybe I'm weird. I don't watch Disney stuff. And but then it went away. There's no chance that I ever subscribe for that again. But people with kids, you'll subscribe for it. GGP. So if I'm going to do GGP, but any gold one that you pull up. Oh, I don't have GGP. Is this foreign? Guggenheim. I don't know. All right. But anyone is new. The Mandalorian. I don't know what that is. All right. Well, I think that's it for today. We've gone about 45. Oh, SNDL. I'll do it for you, Omar. SNDL. Sundial Growers. I assume this is marijuana. Holy crap. All right. That's quite the fall. This is a short. If you want to do something with it, I would recommend day trading this and nothing else. Man, this is terrible. If you want to throw a tracker share on, go for it. There's a good chance that it falls to 60 cents. There's probably a good chance that it goes to $3.90. So I don't really know what to tell you with this. I would day trade this. Yeah, this is too much. This is too much for me. Too much for me. I don't do those kind of things. Glad I caught ya. Me too. You guys are good. I enjoy this. I kind of want to start doing this more, but I think I'm gonna do. I'd rather have a studio at my house and do it from home. It's a Star Wars series. Oh, I've never seen Star Wars. It's far too loud. All right, guys. Well, you guys have a great day, and I will see you at 1 o'clock on the live stream, 1 o'clock Eastern. And I hope y'all make some money. And if you guys like this and you guys want to talk more about trading, join the Mo's Muscles Patreon group. I talk about this all day, every day. I make a lot of short videos. So when I go in and explain like what a power stock is, what I explain any kind of movement, I go and I make like a 2-minute video and I send it to you directly if I'm not out in meetings or busy or something like that. So join. It's $55 right now. It's only going up from here. I think there's 30 spots or less left. Once those 30 spots are filled, price is going up. It's going to go up every time. So you guys have a great day, and I'll see you in a couple hours. Yep. Bye-bye.